Alright, this will be the recap for Wednesday, July 30th. Looking at this pre-market screenshot, we have kind of been in a balance between 6420 and 6400 since about midday yesterday. So that was really my main watch today, was just these balance extremes, the 6420 and the 6400, either looking for a reversal or if one of these levels did break for continuation in the direction of the balance. FOMC is also this afternoon, and there was some news at 10, some stuff to watch out for. Yeah, we'll get into it. So, market opens up, sells off. Looks like we're going to get in a retest of that 6400 level, but we don't. We stop at 6405, reverse, push up, come back down, and then we sell off again from this high of day area, come all the way back down here into this low of day area, and I kind of start to see this as a lower time frame balance, and I was fine with putting on some risk down here, looking for this level to hold based on the confirmation that we got, looking for an upside move, just a little bit premature to that higher time frame key level. But this is a type of setup I'll take any day, lower time frame balance reversal. So looking at the tape, you get that balance here at open, get that retest of the highs, and then sell off. This is really what confirms that we're in a lower time frame balance, this sell off right here, because we reject that higher time frame and now we're coming back into the lows. And there is very aggressive selling here. We can see here at 947 on the way down, at the 6411s, we put in a massive sell order right there, almost 800 lots, coming in right around here, which led to that aggressive sell-off into the low of day, where, like I said, I wasn't just getting in here just because, my main watch was the 6400 level for that balance, but with the way the structure developed and with the way we got confirmation down here, I got in. So that aggressive sell-off comes, and then we get an aggressive sell-off, another try right here into the 6405 low of day, right here into this thick bid, and we get a buying reaction off of it. And that's pretty much good enough for me to get in because we've got that aggressive selling retesting the level, and you can see a passive buyer down here now possibly defending against that selling. You can see we get a few pushes up and a few retests. Selling comes in on those retests, heavy selling, and you can see on the depth of market and right here on the chart delta, you can see some red delta here at the lows, showing that selling that's coming in, that's been getting absorbed down here by this passive buyer or this bid, and I'm looking for that selling to get trapped on this way up. So get in at 952 on this candle. My original plan is to not exit until like pretty much here, it's 12 through 15 area, and then I was looking for kind of like the 18 through the 20s for my final targets. But with that being said, with the way I trade, this rallied a little bit, rejected, came back down to my entry. When this started rejecting again at this previous rejection area, I went ahead and scaled out some of my position up here. And there's multiple reasons why. It's FOMC day, volume is extremely low. We're in this tight balance already, so there's, like, even if we do get a big push, I'm not expecting a ton more. But the main thing is the low volume and the red flag of rejecting this level a second time. So I get out a little bit there, and then we sell off again back to my entry point, rally up again. At this point I get out another lot because it is again looking like we might reject here. So at this point I'm not really concerned about maximizing my profit. I'm now concerned about reducing risk because this trade is not necessarily looking the hottest at this point when it's rejecting this level multiple times on super low volume in this tight balance range on an FOMC day. So I'm reducing risk, and then eventually we do get this push up where I scale out more in this target zone, And then I was able to catch a little bit more on my runners, or runner, I should say. Look at this. Went in with a little bit more size today. I'm going to try to stick with 9 lots for a little while and build up to 12. But there's the entry. There's that first scale out. Not too many points on that. It's like 2.5 points, but that's just reacting to the market, and that's following my system, and I'm fine with that. There's other days when the conditions are better, when it's not FOMC and it's not low volume and we're not at all-time highs, when I would probably let that run. But with these conditions, I'm completely fine reducing my risk here and not allowing for as much potential profit, because when this stuff is happening, the chance that we do push to the upside is much less likely. So this is just reacting to what the market's telling me and managing my trade based off of it. So there we finally get a little push into our target. Still not the best scale outs. Just reducing risk when it looks weak. Then these two got a better scale out, and then this one, nice runner. So overall, if I would have just held to this original target, it would have worked, but I'm not mad at all with how I followed my plan, because if I saw this and didn't act on it and then it reversed, I'd be pissed that I had a full loss instead of a reduced loss. But yeah, that's gonna be it for today. I do not trade FOMC. There could be more moves. We could get a break and retest of this Q level, but on a day like this, FOMC, low volume, if I get a one and done win, I'm going to take that, and I'm not going to chance it. So, yeah, that's all.